Hey everyone, hope this finds you doing well. This is Danelle, and it has been one crazy week in the crypto verse. If you haven't heard by now, FTX, one of the largest crypto exchanges in the world, filed for bankruptcy on Friday, November 11th, and the crypto market has responded with a number of cascading events that have affected many, many people around the world. FTX, due to its bankruptcy filing, has now halted all withdrawals, and the contagion affects other platforms as well, like BlockFi, FTX US, and there are still more to come and more to find out as we learn more and more about all the different tentacles that are related to FTX, to its CEO, Sam Bankman Fried, to Alameda Research, which was another company under the FTX umbrella that had strong ties to FTX and FTX US as a trading firm. There were a lot of there was a lot of movement of crypto funds from FTX to Alameda Research, which in turn did numerous types of trades. And apparently, there is potential allegations of fraud and mishandling of customer funds. And so it's all currently a big mess. And the crypto markets have definitely reacted. As you can see, Bitcoin currently down over 20% at 16,847. Ethereum currently trading at a little over $1,200 at $1,265. And you can also see the effects of what's been happening in the market over the past week with coins like XRP, Dogecoin, Cardano, Polygon, Polkadot. Pretty much everything in the top 50 and below have been affected this past week over the past 7 days, particularly Solana because they had a lot of strong ties to FTX. Sam Bankman-Fried was a huge proponent and supporter of Solana. From our understanding, had a lot of investment in the Solana cryptocurrency and the Solana blockchain. So they saw a world of hurt. They were over $35 last weekend and went down as low as $12.51, I believe, at the bottom this week. So there are a lot of people that have been affected by what's been going on in the cryptocurrency market, not only from losing value in their cryptocurrencies, but unfortunately, a lot of people now have funds that are locked up on a couple of these platforms, and most likely they will not get the value of that back. Hopefully, at some point down the line, they'll be able to get some value, but it's highly unlikely they will be able to get all of their current value back in the coins that they left on the FTX.com or FTX.us or potentially BlockFi.com platforms as well. So this all kind of started. And first off, let me tell you one of the best rundowns that I've received that was digestible and understandable was by Guy of Coin Bureau. If you go to this particular YouTube video, it was right before FTX had declared actual bankruptcy, but he breaks down exactly the events of how they led up to where we are now, leading up to the bankruptcy, and gives you some of the background as to why some of these events eventually occurred. One of the big events that started everything this week was a tweet by CZ of Binance. He is the CEO of the largest cryptocurrency exchange, Binance, around the world. They do the most volume by far of any crypto exchange. FTX was also in the top 3 of cryptocurrency exchanges. That's why it's such a huge blow, because so many people were trading on the FTX platform and buying and selling cryptocurrencies. So now that they are what looks to be completely wiped out, there's billions and billions, upwards of 10 to 60 billion, I've heard, that has basically vanished at this point in thin air. So CZ, I guess, knew of some of the potential mishandling that FTX had been doing especially using what they call the FTT token, which was FTX native token. They use this token to give people discounts on trading. So if you held more FTT token, that means that you could get a higher discount. And this is not nothing new. There's a lot of other crypto exchanges that do the same. Binance actually also does something similar. But the problem is relying so heavily on their own coin is that if something were to happen to that particular coin, where that coin goes down, people who were able to use that coin as collateral, because FTX, the international FTX, people were actually borrowing funds, borrowing crypto to trade. And hopefully, if they did well with those particular trades, then they'd be able to pay back the loan, so-called loan that they took out from FTX and get their collateral back. So FTX would let people use the FTT token. We'll go here to FTT so you can see exactly what happened. And they were able to use the FTT token as collateral. So if the FTT token, if the value of that token starts to go down, then it creates a liquidation. So what happens, that means that if the FTT token goes down to a certain level, then in order for FTX, or the lender in this case, to cover themselves, they can force liquidate, meaning they could force sell those FTT tokens to be able to get value back for what they lent out to the customer. So what happened was, when CZ tweeted this on November 6th last week, he said, as part of Binance's exit from FTX equity last year, Binance received roughly 2.1 billion USD equivalent in cash from BUSD, which is their stablecoin similar to USDT or USDC, and FTT. A while back, Binance had given funds to FTX as a part of their fundraising, and when Binance then exited, and they reached an agreement to have their initial investment returned to them, they were able to receive $2.1 billion USD equivalent in BUSD and FTT. They decided, due to recent revelations, whatever that means, that came to light, we have decided to liquidate any remaining FTT on our books. So this began the downfall of the FTT token. So he says, in order to minimize the market impact, they will expect to take a few months to complete the actual liquidation and selling of the FTT token. But this sparked a lot of speculation. A lot of people were concerned. And so then people were starting to sell their FTT token. And if we go back to FTT here on CoinMarketCap, we can look and check the last 7 days. And as you can see, it was over $22 a week ago. And then on November 8th, as we saw, CZ tweeted that on November 6th. November 7th, the information started to come out and people started to consider what was going on with that, and thinking that once Binance starts dumping those coins, the price is going to go down because of sell pressure. And so people started selling their FTT tokens. And then as the price started to go down, it crashed on November 8th. So basically within 24 to 48 hours after that tweet, FTT crashed all the way down to below $5. Once this happened, this caused a cascade of liquidations, as I was mentioning earlier, the liquidations of people who had used the FTT token as collateral, and the price continued to crash down to nearly $2.50. And currently, as you can see, it's now trading at $2 after all of the revelations have come back over the past several days. So as this started to happen, then there was what you call a bank run. So people were now starting to get concerned because they started to hear rumblings about FTX being insolvent and having issues because of the fact that once FTT token, which they were heavily invested in and had used as collateral, and did all types of dealings behind the scenes with potentially Alameda Research and other companies and venture capital firms. And so apparently, now that this is happening, people are saying, you know what, I need to get my money off of FTX. I need to get it off now, because they learned from this situation that happened several months ago that we talked about regarding Terra Luna and that crash, and what happened with Voyager because of their dealings with Three Arrows Capital, which is a huge crypto hedge fund that was extremely long and had a ton of exposure to Terra Luna. So once Terra Luna went down and crashed, it affected a bunch of companies, including Voyager and then also Celsius, which are both now in bankruptcy proceedings. So people were saying, hey, I need to get out as soon as possible. So they started to get their coins off of FTX. Once this happens, it's called a bank run. So now FTX is trying to find the money to be able to give their users the money that they have on their accounts in their platform. But the problem is that FTX didn't have all of the money that people were trying to get off of the exchange, because what they were doing was what people are alleging are nefarious dealings with customers' assets, and that they didn't have all of the customer assets one-to-one like they should have. They were taking those customer assets and doing something else with it. Some people are alleging that they were sending it over to Alameda Research, and Alameda Research was then taking those customer funds and trading to try to make more money, and then you have the reserves for the customer funds and then also have more money for the company as a whole. So we don't know how long this has been happening, but what happened after that was FTX then rushing to try to fundraise as much money as possible. The only one that could really go out and potentially save them was Binance. But then over time, Binance said that they were going to look into the books. They had signed a LOI, which is a letter of intent. And then after a certain period of time of doing their so-called due diligence, within the next day or so, we realized that Binance was not going to be able to bail them out. And I'm looking for that tweet right now from CZ and from Binance. So as you can see here on November 9th, they said, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com. So then Sam Bankman-Fried, once again the CEO of FTX, tried to see if there was any other way that he could raise funds, and it looked as if they were not going to be able to get the funds needed. So then they make a press release on November 11th that says that they will be commencing a voluntary Chapter 11. But what is so upsetting and disturbing is that apparently FTX, its CEO, and others were basically lying to their customers. And some of those people, in believing what they were saying and what they were tweeting out, didn't get their funds out in time. As you can see here, even just the day before the bankruptcy announcement, they said on November 10th that FTX US would still be able to withdraw their funds. They said ETH withdrawals will resume shortly. Our apologies on the delay. And even a day or two earlier as well, Sam Bankman-Fried himself even said that they would be able to withdraw funds. So as you can see here, a few other assorted comments. This was on Thursday, November 10th, the day before they filed for bankruptcy. They say this was about FTX International. FTX US, the US-based exchange that accepts Americans, was not financially impacted by this shit show. It's 100% liquid. Every user could fully withdraw despite gas fees, etc. Updates on its future is coming. And then literally a day later, FTX commences a voluntary Chapter 11 bankruptcy, which includes FTX US. So this is a absolute mess, and all these different stories are coming out with regards to the commingling of funds, the commingling of the different companies under the FTX umbrella that should have remained separate. There is also some people who tried to find a loophole because FTX customers had so much money locked up in the platform. They found a loophole where they would be able to buy low cost, basically worthless NFTs through Bahamian customers, because FTX is headquartered in Bahamas. So it's regulated by the Bahamian government. And due to their regulations, they were able to allow some Bahamian users to be able to withdraw Bahamian dollars off of FTX. And so, in order to be able to do that, some customers from other countries and elsewhere were able to so called use the FTX NFT platform, which at the time, I guess, halts had not been initiated. And so, people were buying these NFTs from these Bahamian customers for so-called hundreds of thousands and millions of dollars and using that loophole. And then essentially, I guess those Bahamian users would then transfer somehow, some way to those so-called buyers of these, NFTs that at the time were worthless. So upwards of, I believe, $50 million was withdrawn using this potential exploit. And this was just a day or two ago once the withdrawals were halted on FTX US and FTX.com. It says here from a Twitter user, people now withdrawing FTX balances by buying NFTs from Bahamian accounts for 6 and 7 figure amounts. Buyer then gets side payment and Bahamian withdraws funds. Tens of millions of Tether was taken so far. And there could be some potential problems with people who have been doing this because of the fact that FTX has already filed for bankruptcy and there are crimes against meddling with bankrupt funds because that is now in charge of the trustee of the bankruptcy court. So there's a lot of stuff involved here. We are by no means experts in any way, shape, or form. We think that you should do as much due diligence as possible. Many people are making this akin to the 2008 crash, and we believe that's fairly correct in terms of what's happening to the overall market. And we believe that it's going to be widespread once we find out everything that's going on in the cryptocurrency markets. That's why you trust no one. But the great thing about cryptocurrency and especially blockchain technology is that it provides transparency. Even though we don't necessarily know whose wallet address it is, we do see transactions that are happening on the blockchain. So that's how people have been able to see what's been going on as of the last 24 hours, because we've also seen that since FTX has announced bankruptcy, funds have been withdrawn from the FTX platform. Some of it seems as if was some type of hack. And then also we've seen that there has been some action taken by the FTX CEO, the new FTX CEO and FTX team, that in order to safeguard the funds that are left, they had been moving those funds to another cold wallet for extra security. So there's so much going on in this particular situation. There's also a salacious story about the fact that SBF, he had been coming out to the world saying that, he was planning on giving away most of his fortune. At the time, he was worth billions and billions of dollars, one of the youngest billionaires ever in history, that he was driving around in this old beat up Corolla. But apparently it's come out that he had a $35 million mansion in the Bahamas. And it was him and a bunch of his buddies who started FTX that were living there. And that apparently there was some salacious things happening there at the mansion. And so you can find out a little bit more about that situation and how that also includes the Alameda CEO and other folks who were in executive positions at FTX and Alameda. So it's a mess right now. And there's a lot of dominoes that are going to continue to fall. We will keep you posted. Thank you so much for watching. This is a story that's developing and will continue to develop. So keep your eyes on what's going on. At the end of the day, we still believe in blockchain technology. We believe in Bitcoin, but you have to make those investment decisions for yourself. Never invest more than you can afford to lose, particularly in the cryptocurrency space. But in the meantime, we hope that you take care out there. We look forward to connecting with you soon on the network chain. Bye-bye.